Welcome everybody to Trade Talk. Today we got a lot of stuff to talk about today. It's going to be a fantastic week. It is just going to be a 4-day trading week next week, as Monday is a holiday here in the US. So it's going to be a very, very low volatility expectation week. All right, first and foremost, I want to start out with the S&P 500. Of course, we will get to Bitcoin. Just bear with me for 1 second, as I see a lot of hype on Twitter about this bearish engulfing. Now, this bearish engulfing came on Thursday of last week. What happened on Thursday? We had PMIs, and on Wednesday, we had the FOMC minutes. The FOMC minutes were a little bit hawkish, stating higher for longer, which we already knew that. You can see that the marketplace did not have a severe reaction to that news. And then on Thursday, when the PMIs came out, the PMIs just basically said the Fed isn't probably going to lower interest rates anytime soon. So the market sold off, and it sold off heavy. What I was saying about Twitter, there are a couple big accounts that's noticing, this bearish engulfing. All right, first and foremost, we are at a low VIX. With a low VIX like that, generally the markets melt up. Secondly, even though we did have a bearish engulfing on Thursday and Friday, we closed pretty much unchanged, because this blue line that you can barely see, or probably can't even see, is literally the close of Friday, the previous week. So we closed just a little bit above unchanged on the week. So you're literally a doji on the week. But if you look at that doji, it says something pretty spectacular, if you ask me. Here is your high week close, or was your high week close on the S&P 500. You can see last week, not only did we close above that, we closed above it nice and strong, closing not on the highs, but close to the highs. And then on this week, we have that doji, we have that move down. That was your big engulfing bearish candle. But notice the close. The close is 5304 spot 71. If you look right up here, right there, if you watch that number and I go here, we got 5303 spot 26. That's right. This weekly close, even though we had a bearish engulfing on Thursday, is a fresh high week close on the S&P 500. Even though it closed as a bearish candle being red, it's actually more bullish than bearish as far as signal goes, because you closed higher than last week. So with everything the way it is currently, I would probably assume that the marketplace is either going to be sideways again next week, or we trade a little bit up. Now, the expected move for next week is $50. The actual expected move is 49 spot 70. So I rounded it up to 50. So we got a $50 move from 5304.71. That'll put you at 5354.71. And then the low edge of the expected move would be 5254 spot 71. So a smaller range, an inside range compared to last week as far as the volatility is concerned, but doesn't mean that price is going to stay within these lines. All right, what if I wanted to trade this in a bearish way? Simply because this bearish engulfing, one of the best trades that I've seen all year, and it's because of the SKEW. Let's pull up the SKEW real fast. The SKEW just basically tells us whether or not people are hedging, and guess what? Boom. It exploded back up to 155 after bouncing off of the 130 area down here for the last 3 weeks, straight up. What does this mean? Well, that means that we are seeing hedging activity. I'm going to pull up my tastytrade brokerage page over here and show you this trade. All right, so Friday, if you will, I got long Friday morning around 9:50 in the morning, and then I left. I had to run errands. So I'm sitting in a long micro E-mini futures position. And so if the S&P 500 does in fact just melt up, if that is the case, then that position is going to pay nicely next week. Obviously, it can go down, and if it goes down, I'll be stopped out. So how can I hedge this position with the SKEW being up so high? That is a beautiful question. Let's go over here to the VIX, and we're going to check out the 23-day. 23 days is the sweet spot for some reason. And I'm going to pull this up and show you. All right, first of all, look at the open interest at the 2 strikes that I am looking at. And we're going to buy the 14 strike. That's going to cost us 89 cents. and then we're going to sell the $20 strike at 14 cents. There is 254,000 open interest out there on that $20 sold strike, and there is 174,000 open interest at the $14 strike. So it does appear that this spread is being put on by a large margin. And why would that be the case? Well, the sheer risk to reward. I am not able to put the trade on yet. I wasn't paying attention to the 23-day strike on the VIX. I've been looking out further. Look at the max profit. The potential max profit on this trade is $545 of profit, and it will cost you all of $55 for the risk. That's a $55 risk. That's a 1% risk for my account. And the max reward would be $545. So that's a 1 to almost 10 as far as risk to reward. Now, it's not likely that you're going to make the max profit on this trade because price would have to trade up to like $26 or $27 on the VIX for this to cash out into max profit. But still, if you could get it up into $300 or $400 range, that's still going to be a massive 8-to-1 reward to risk potential. So literally, just by getting long this trade, you're going to lose 1%, or I would lose 1%, and there's a potential to make that much out of it. That is a phenomenal trade, risk to reward wise. So yeah, if I can put this trade on Tuesday for 60 cents or less, then I will be opening this trade as soon as I can on Tuesday morning, because like I said, I am already long the S&P 500. So if this just continues to go up, then obviously I will lose that money on the VIX. But if we do have an explosion to the downside, then that trade will pay nicely. All right, so here is the VIX. One thing I do want to say about the VIX is we did just have a pullback on the S&P 500, and the VIX got all the way up to 2136. It can move quickly in just a couple of weeks, but we just closed at $11.92. That is the lowest close on the VIX that we have gotten since before the pandemic, right here, April 8th, 2019. So that's a year before the pandemic. That was the last time we seen the VIX close at a level like this. If that bearish engulfing is going to be a bearish signal for the S&P 500, then the trade is to go out and buy the 14 strike on the VIX 23 days out and sell the 20 strike if we can take it and get in around the 55-cent mark. If we can't get in for that kind of a price, then we'll probably have to leave it. All right, so a couple things on Bitcoin. First and foremost, we had a very nice bounce off the lows down here, had a bearish close there, which ended up being a bear trap. We got bullish continuation going all the way and tagging the high week close. We were within $1,900 of the all-time high when we got there. All right, so that's the resistance area. That's where you're rejected from. You also have a trend line that you now have a 3-touch. That's a little bit of downside resistance as well. So a lot of people, obviously we're taking profits up here and a couple short positions added on. I don't think you should be looking for short positions just yet. Obviously, time will tell if I'm wrong or not, but I still believe that everything is still structured bullish. The S&P is still structured bullish. There's a lot of other charts that I've looked at. It's not just the S&P and just the VIX. Your moving average structure is very uber bullish. So everything looks nice and bullish still. So that's definitely the way we want to look to trade Bitcoin, even though we did reject off of that high week close. But remember, getting within 1900 of the all-time high is a pretty phenomenal thing. Now, after we did do that, you can see we did have 3 days of rejection. We pulled all the way back to this bullish candles open, which would also be this bearish candles close. That is support. So you traded down to support and then rejected. And so far we've gotten a 2-day bounce off of that area. So the near term, very, very near term levels that I am watching for potential support for areas of potential buying would be 67.940 spot 45 and 66.261 being this other support down here. Now, if we do break and close below this upper support level, I don't know if I'll be quick to buy this level, because I never like it when price retests a support level and then in a couple days later comes back to it. A little bit more bearish momentum than I would want to see in order to take a long. However, but with that being said, as long as that support area holds, then I would indeed end up taking the long ultimately. But these are the two levels that I am currently watching on that. Okay, so basically we went over everything that I wanted to go over. Let's go take a look at Ethereum, because if you remember last Saturday's video, I put up ETH BTC. You can go watch it. It's tagged with chapters, so you don't have to sit through the whole video. You can just simply go look at the ETH BTC video. We were here. Right there is where we were when I made the video. And I was essentially saying that, you know, on the RSI, we got all the way down to 28, which is an area that you would look to be a buyer. Most of the time, whenever this thing has hit oversold levels, it has gotten a nice little spike, but ultimately been sold down into. And then I said there was massive bullish divergence going on with this big move right here. Is this going to continue? Obviously, nobody knows. Sunday's close. If we close the weekly above the 50 on the RSI, I like the chances. However, with that being said, we did do that very thing here, and it ultimately did not hold. All right, so just closing above this 50 isn't going to mean that we're going to see continuation to the upside. It starts to get into the area of caution, right? As if we are able to get above it, close above it, come back, retest it, and then hold a support and then start to go to the upside, then I would say that, yeah, we're probably at a bottom and we could potentially be looking for the new cycle to go up to overbought on the weekly RSI, and that could be a fantastic move overall. So ETH BTC trade worked out fantastic. I didn't take it. I don't trade ETH versus Bitcoin. I generally here lately have only been trading Bitcoin. So yeah, that's what we got. But just looking at cycle model theory here, you can see basically these lows come in. This low was higher. So ever since we made the lows in January 2008, which was, you know, the financial collapse, the dollar, it has been trending to the upside. This is on a long-term look. The dollar has been trending up since '08, and it has been finding its lows, or, you know, potential lows around the 4-year mark. So these are 4-year cycles here, and you can see that we are in the midst of one right now. It does look like the dollar is, as far as the 4-year cycles are concerned, could be trying to bottom here. All right. But on the near term, and with risk where it is and all that, I would still be looking for, you know, more bullishness. So with that said, you guys have a fantastic day and a fantastic rest of your week. Make sure you guys trade safe, trade smart, and as always, happy trading, everybody.